Hey, ladies and gentlemen, welcome back to the channel Knowledge Nexus, and this is your friend again, D. I'm actually telling you my name at this point, which is a good thing. Now, welcome back. If you are new to the channel, this is that channel where we get to teach you more and get you more into various subjects, and we just love to say welcome to the channel. Now, today's main topic will be focusing on circular flow. Now, circular flow, usually circular flow is the first topic in grade 12. This first main topic in grade 12. Now, obviously, we're gonna start by obviously, I know you're asking, what is circular flow? If you've never heard of such things, but I know you did circular flow in grade 10. If someone still remembers, if you still remember, which is a good thing, which means you have a nice foundation for this topic. What is circular flow? The circular flow model is the model that illustrates and explain how money, goods and services flow in the economy and how they get to be exchanged in the economy. Now, it also shows the interdependence between economic participants in the economy, such as households, government. Now, remember, government can also be called a state, so don't be confused when they say state on government. It's just the same word. Government, firms, and foreign sectors. Now, we just love to get into most participants of the circular flow and what they do in the economy, their roles and what they do in the economy. Now, just gonna start with the government. Now, the government is the main participant in the economy, which is why I decided to start with the government. Now, the government is the one that's usually controlling it's usually controlling let me just say the government is the one that's in the middle of almost everything. Yeah, all the transaction, the government is usually just involved. Now, the government employs, it spends, it invests, it exports, things like that. But usually it's the one in the middle, which is why I just like to say it's one of the most important ones. It's one of the most important ones because it controls almost everything by putting on legislations and laws, and what else? Things to make sure the economy is stable. I hope you understand that better if I put it that way. Now, the second one will definitely be the household. The second participant, it will be the household. Now, household, you have to understand that household is a consumer. You know that a household is a consumer, and as a consumer also it can be labor. The consumer is the one who purchases goods and services for their own purposes. But then you also have to understand that the consumer is also one of the factors of production in the economy, because consumers are workers, which is labor, and labor is a factor of production. But at this point, you are not going to talk about factors of production in this topic. We just know that households usually they work for the government and they work for the businesses and enterprises, which brings us to the next participant, the third participant, which is the business. Now, the business supply households and government with goods and services. As we know, as business produces, and business give employment, that, and gives revenue to households, which is labor. Now, as I told you, households can also be labor and can also be entrepreneurs. Households are actually important in the economy. They actually play a very, very, very big role in the circular flow. Now, these three participants that I've talked about, which is the government, the business, and the households, these all these three combined, it is called a closed economy. It is called a closed economy. Why is it called a closed economy? Because it involves only three participants in the economy. It only have three participants in the economy. It does not include outsiders. It does not include outsiders. The outsiders, which will be the foreign sector. The foreign sector. So if the foreign sector is now involved, sorry about that. If the foreign sector is now involved in the secular flow, it is now called an open economy. It is now called an open economy. Why? Because it is allowing the foreign sector to participate in a certain economy that is a different economy from the other. You know, when we mean an economy, we just try to mean a country. That's exactly the meaning of an economy. You know, so if a country start to include a foreign economy, you know, a foreign sector, which is foreign countries, which means it's trading with foreign countries. Let's just say South Africa, right? South Africa, it itself, it's a closed economy, but then because it includes and it trades with other countries, which is called an open economy. An open economy. I don't know if that makes sense to you. So, a closed economy is an economy with three participants in the secular flow model. The three participants, which are the government, the households, and the business. Now, the open economy is the secular flow with four participants, which is the government, the business, the households, and the foreign sector. I hope that makes you understand better. Now, we're going to talk about the leakages and the injections. The leakages and the injections. These are considered in the secular flow. Now, in the injections, the injections are obviously when you go to a hospital. When you go to a hospital, let's just say you're sick, or you have a stomach ache, a headache, or an unstoppable headache, or some kind of sickness that's bothering you. When you get to a hospital and then they say you need an injection, obviously they need to put some medicine in you through some injection of some kind. I'm not a doctor. I'm not gonna explain that much. I don't know much about that stuff. I'm not a doctor or a nurse. So an injection, basically in economics terms, an injection simply means the money that comes in the economy. That is an injection. Simply means that the economy is gaining. The economy is gaining. Yeah. I would say the economy is gaining. Now, the signs the economy gains when there are three main injection topics. Let me just say concept. The economy gains when the government spends. That's the first one. Government spending is an injection. The second injection is imports. Okay. Now imports, obviously. Sorry about that. I meant to say investments, not imports. Not imports. The second injection is investments. Please scratch out the imports. Please scratch out the imports. That is not an injection. It's investments. Please, I'm really sorry about that. That's the second injection. Now, investments, obviously, when you invest something with an intention that it's going to bring more money in the economy. It's going to bring more money. I know there are some of the people here on this channel who are more business minded, and somehow and they think that they will invest on something, on some business or some company, which is something very good. Obviously, you expect something in return, but with more interest and a bigger return. That's That's the second injection. Now the third injection is exports. Exports. When a country exports goods and services, obviously it's gonna get paid. You know, it's almost like selling something to someone. When you sell something to someone, you're gonna get money and also with profit on top, which is something that you're going to use for your own benefit, right? Yeah. So which can be an injection, obviously, because you're going to use that something for your own purpose. And let's just say you decide to sell a watch. You decide to sell a watch. You bought that watch for 100 rands, right? And now you're going to sell it for 200 rands. And maybe I'm just being hyperbole. Maybe this I'm just being too optimistic. Let me just say, yeah, but that is an example anyway. You decide to sell that watch for 200. Obviously, if you're gonna buy more watches, or if you're gonna buy another watch so that you can sell it, you're gonna spend 100 rand on another watch so that you can sell it. But the 100 rand profit, you're gonna use it for your own benefit. Let's just say you're gonna buy a t-shirt that you're going to wear, which is something like an injection, or you're gonna save that money and invest it again, which is a good injection again. That's just a great recommendation from me. But let's go to leakages. Now leakages, it's also three leakages, which is the first one is savings. Now leakages is the money that flows out of the economy. It's a loss. Let me just say a loss, because the economy is losing money. The money is going out of the economy. Now first leakage, it will be savings. Why savings? I know you might be confused. Why savings? Now savings, you have to understand that when the money is created, when the money is printed by the Reserve Bank of, let me just say, the Reserve Bank of South Africa, it is expected to work and expected to circulate in the economy. So then if you save the money, if the money is saved, it means it's not circulating in the economy, it is not working. Now it's standing still, which is not good for the economy, because it leads to some shortages. You know, money have numbers. It leads to some shortages on numbers, which is a leakage, because the money is not working. Now the second one is taxes. That's the second leakage. Tax, you know, people, when they pay tax, I know you might feel like if it's someone who've done economics for a long time, when taxes are paid, it goes to the government, and then the government spends it again. Okay, you must remember that the government also pays tax somehow. It pays tax to someone. You know, let me just say, like import tax and stuff like that. But it is considered as a leakage here. The second one, it will be imports. Oh, that's the last one. The last leakage, it will be imports. You know, when some products arrive in the country, let's just say a phone is made in USA, an iPhone is made in USA, and you decide to buy an iPhone, right? Obviously it's gonna be transported, it's gonna shipped from USA to South Africa. Now you're going to pay for that iPhone in rands, right? Which is going to leave the country, this country. That money is going to leave the country, which is a leakage, because the money is going out of the country. Now that's what we're going to talk about on this topic in circular flow. If you've got more questions, just feel free to write down on the comment section below, and if you enjoyed the video, subscribe for more, because we still do have a long way to go.